Well, good November morning, everybody. It's great to have you along with us today for our final coffee and grain markets program with Dr. Seungki Lee for the 2025 calendar year. And as we were talking off air a little bit ago, we're excited to, begin those plans for the similar programs, coffee and grain markets for 2026. We're again excited to have Dr. Seungki Lee with us to share his insights into the WASDE report that was shared out last week. With me today, myself and Eric Reeker are going to moderate our program today. Eric and I are field specialists with OSU Extension, and happy to have you along today. Just a couple housekeeping items. You'll notice that there are chat and also Q&A features in the webinar room that we're in. Feel free to offer up your questions into the Q&A. We will reserve the chat for maybe some other drop-in information that if we need to share throughout this webinar, we'll use that chat feature. But if you do have questions that you would like Seungki or us to answer or respond to, feel free to offer those in that Q&A. We're very thankful for our sponsors to make the coffee and grain marketing webinar program available for all of us to enjoy. Those sponsors are OSU Extension, the Ohio Soybean Council, the Farm Financial Management and Policy Institute, and at Ohio State University, the Department of Agricultural, Environmental, and Development Economics. And so, kick things off. Welcome, Seungki. Thanks so much for being here. You've had a busy week, and we'll start with our first question. So we finally got that WASDE report last Friday. And what have you seen so far as some of the main takeaways from that November report?
Thanks first for the nice introduction and nice opening. Thanks everybody for joining us. So yeah, let's get started. It's been a while that we got the new WASDE report. So first I want to actually start talking about how market has been doing while the WASDE report or even the generally USDA information was not available. So this is actually the future market trends while WASDE was absent and even other USDA information was absent. So during almost past 40 days, we didn't have any market information. But interesting point is as you can see, this is actually corn futures contract for December and soybean futures contracts January price trend, as you can see. And interesting point is during the past almost 1 month, there has been somehow market rallied. And I would say there were actually two reasons why market actually rallied for different reasons, but pretty fair, good reasons. For soybean market, about 2 weeks ago, or maybe now about 3 weeks ago, there was an APEC summit, which was held in South Korea. And we know that Presidents Trump and Xi, they're gonna meet, and people really had some good optimism. There will be a good deal that eventually China will reopen their market, so our soybean export will be taking off. So that kinds of prospect really made market rally. So as you can see, at some point in mid-October, the red line, which is corresponding to the right y-axis, soybean futures price has just gone up with really high optimism back then. And also for corn market, even though people in the market really worried about really overwhelming size of supply, but like during the absence of WASDE, people thought that maybe that we know that there is some southern rust issue, which is corn disease happening in Iowa and South Dakota, Minnesota. So people thought that there will be some significant adjustment in the production number anyway. So then market will maybe can get a little bit better balance and improved corn fundamentals. So that's why people expect and based on this kind of hopeful and optimistic expectation really made market rally. And finally, we got a new WASDE report after the government shut down. So you can see shutdown ends. So as you can see, as the last data points, market was really disappointed by the new WASDE report. I think this already hints us what WASDE will say during my talk today. But so last Friday on WASDE day, corn futures market went down by 19 cents, and the corn futures went down by 12 cents. Soybean futures went down 19 cents just on that day. So, but I think still like many people like so questioned, oh, is this really like how much faith we can have with this number? So actually, I checked and compared the sample size of what WASDE did for this November WASDE report. So the black box is actually showing the November like 2024 WASDE like data sample and field survey size. And compared to that, like we have 2025, I actually could check the November was these like back end data, and actually this is pretty solid. They have pretty like similar like size of the sample and the operation and process wise. I don't see any problem. So actually, even though market disappointed, we shouldn't like downplay the importance of this WASP report. They just follow the rule and follow the like process, and then the number is just what they got. Okay, so even actually when you look at the farmer survey, the sample size has increased compared to last year. And the field survey, they just use the same size of the field. So go out to the field and do the objective survey for the yield. So I think the number wise still it might be disappointing, but I think we shouldn't doubt the credibility of this number at this point. And like just quickly summarizing actually what, or maybe this might be just my reading and my outlook based on all the numbers shown up on the WASI and other market information. I would say like as you can see like on top of my head, like the picture, I feel like this is kind of my sentiments or my like view on the market now. So I feel like we are like balancing on a knife edge. So we are in a situation that like having a market that is very sensitive to either bullish news or bearish news. So we kind of have very like kind of subtle balance now for even like for both corn and soybeans markets with different reasons. So for corn market, we have large supply. I think that's just, I think bottom line we have for this marketing year. But also we have strong demand. So this large supply, strong demand, and strong demand prospects, that is really balancing the market. So basically, in November WASDE report, USDA did not cut supply very much. That is the disappointing point to the market actually. Still, we see a record high corn yield, which is 182 bushels per acre, and record high like total supply, which is over 18 billion bushels. But also we see like very strong demand. Overall, like all demand sectors are doing really well in the corn market. And especially there is a remarkable export progress we are seeing these days that really helps like market kind of digesting a large corn these days. So overall, like all this together, market is kind of getting somewhat like very like unstable, but anyway, having a balance, like which made us like and which made USDA says uh, the season average farm gate price will be at around $4 per bushel. For soybeans, we see a little bit different story, but still, I would say this is also a balanced situation. We have a moderate supply, so supply number itself will not be as large as last year, but we also see kind of weak export, which made many people worried a lot, especially because of the temporary boycott of China. And now, as China lifted this boycott, we see weak export, but with a little bit of optimism. So this kind of mixed sentiments is really making market balanced. So China's boycott was reflected first. So export down like 50 million bushels from September. That's what USDA adjusted in the final number in November. And we still have record high yield, soybean yield, which is the national yield, it will be 53 bushels per acre. And I think mixed view on exports because people think that once China like reopens and starts like and fulfilling the commitments that they are going to buy 12 million metric tons by the end of this year, then probably we're going to have like pretty good number of exports at the end. So that's kind of optimistic view, but also at the same time, it's like some people question that whether China actually will have enough capacity. Already they purchased a lot from Brazil and Argentina, so whether they have enough capacity to purchase from the US, and also whether after like fulfilling the commitment they can even purchase more than that. So that kind of lingering concern of how much China's import performance can do for our soybean market. So that kind of mixed view are existing and really like kind of making market somewhat like balanced, but also very subtle and sensitive to any kinds of information now. So USDA now said the season average price for soybeans for this marketing year will be $10.50 per bushel. So that's just very like brief like overview of the current WASDE report.
So Seungki, that overview is extremely helpful and has kind of the big nuggets. Can you share a few for those that want to know more? Can you share a few of the details of how we arrived at $4 corn and 10.50 soybeans? Where the supply come from, and where's the demand going?
Yeah, sure. So let me now like jump into a little more complex and busy table. So for let's move on to the corn first. So for instance, this is corn like balance table. So you see like the first column is 2024-25 marketing year, which is just like the previous marketing year. And I also listed the second column is November, the new updated WASC number. And third column is change from September, so the previous WASDE report, so how much USDA changed. And then the last column is saying like showing the year over year change between like now and previous marketing year's numbers. And obviously, like as I highlight, like the yield, like national yield, that is I think the major thing like which is dominating the market. So we expect 186 bushels per acre as the national average corn yield. Although USDA cut it like by almost 0.7 bushels per acre like from September, but still I think this is well above of what we had like historically. So even like last year, our corn yield was not that bad, but nationwide, but still, like I think we see that it's gonna be more than 7 bushels per acre, like above, like increase this year. So, and also the other thing I want to highlight from this supply side, which is just in the white area of this chart or this table, USDA actually increased quite a bit in beginning stocks. And this beginning stock increase is actually driven by uh, quite a bit of a reduction in the previous marketing years feed and residual use. So which is mainly because like, probably I'm gonna have a chance to talk about this later, but Mexico, like throughout this actually calendar year, Mexico had a disease issue in cattle industry, which is called New World screwworm. And because of that, we also actually couldn't import much from like the cattle or like kind of cows like from Mexico. So that really like kind of undermined our like cattle like capacity expansion and eventually cut down the corn demand like for feed and residual. So that really flowed into the beginning stock because eventually we couldn't use it as much as we expected in the previous marketing year. And then they just moved into the stock. And now we see some added supply to this marketing year. So at the end, we have like total supply of over like almost 18.3 billion bushels, which is more than like 1.6 billion bushels larger than what we had last marketing year. So that's just, I think, by and large, the dominating factor in the corn market now. And when you look at the demand side, like it's very interesting. We see like all the demand sectors might have very strong like demand performance. That's what USDA expects now. And I see actually the reason they actually have a good reason to predict this number, but also still I think this very optimistic view can be eventually realized or not is we need to overcome many maybe potential challenges. For feed and residual, still like Mexico's like New World screwworm issue is continuing. So we don't know how much fast we can actually expand and uh, kind of expand the capacity of cattle and eventually like increase this demand part for the feed and residual. So at least USDA said like we are gonna have almost like more than 600 million bushels larger like corn demand from feed and residual. That part is still, I think, somewhat blurry and like uncertain at this point. Ethanol is the same. Like USDA expects we are going to have almost like 164 million bushels larger corn used for ethanol and byproducts. But also when you look at the ethanol market, actually, it is pretty mature and stable, even though we have slight increase, but I'm not sure actually ethanol side can actually increase this much corn demand during this marketing year. So kind of there's a mixed like views that like we might actually have this number, but also we might not. That's one like, very realistic view of like that USDA eventually will cut down this corn use for ethanol at the end. And probably one of the main thing that people are very excited but also worried is USDA's like over 3 billion bushel exports prospects. Um, what I want to emphasize here is actually last marketing year, when you look at the like 280 like 830 million, like so basically 2.8 billion bushels of corn exports last marketing year was our record high. We have never had this much corn export in our history. So that was our record high corn exports. And as you can see, USDA expects that we are going to have like 245 million bushels, like larger exports this marketing year. So on top of the record high corn export that we had, we're gonna have a new record high, which is much larger than what we had last marketing year. Uh, so that's at first actually I doubted like, and I was somewhat skeptical of whether we can actually achieve that, but given the very fast corn export progress these days, I kind of can see like why this argument is very sensible and somewhat reasonable. So now I think I kind of fixed my view and looks like this export still I think very like possible like target we can achieve. So we will see. But even like altogether, it's gonna be like even though we are gonna increase the demand by maybe more than 1 billion bushels this marketing year, we still gonna end up having like more than 2 billion bushels, like 2.1 billion bushels ending stock, which will be uh very, very large. We have never had this much ending stock before. So probably like storage wise, it's gonna be pretty tricky marketing year because throughout this marketing year, storage management will be critical and maybe sometimes pretty challenging, but also at the same time, if you just imagine yourself like being in the next harvest season in 2026, this much ending stock might be affecting market anyway. So we have to take that into account. Uh, Finally, then like season average price, as you can see, USDA expects it's going to be $4 corn. Still, I think this is not going to be just the final number, so we are going to see some change at the end. But anyway, that's the corn market view. And let me just quickly move on to this soybean side. What USDA said for soybean, we expect we are going to have like record high soybean yield, as I highlight in yellow. The national soybean yield will be 53 bushels per acre. So though USDA slightly cut it down, like compared to September estimates, but compared to the year-over-year change, it's going to be 2.3 bushels per acre higher than last marketing year. And overall, the supply numbers are actually pretty stable in soybeans. So we expect about 154 million bushels smaller total supply for this marketing year. So in principle, if you just think of economics like reduced supply, typically soybean fundamentals should be strengthened. So if the market just operates in a normal way, soybean price is supposed to be higher than now, but mainly this is because of the exports. So as you can see, in the demand side, like in the gray area of this table, I want to highlight two things. First one is crushing. We expect there will be 110 million bushels of soybean increase like in the demand. So which is I think very continuous and systematic and structural change in our soybean market. So I would say our soybean market is basically transforming to very export-oriented market or oriented model to the domestic demand-oriented model. So we are now like with the renewable diesel like boom in soybean, we are really seeing a lot of soybean crushing expansion and domestic soybean demand is getting stronger and stronger. But also at the same time, export we face a lot of uncertainty, mainly because of like many geopolitical issues and also competition with Brazil. So finally, USDA said soybean exports will be almost 1.6 billion bushels, which is 240 million bushels down compared to last marketing year. And total demand will be 4.3 billion bushels. So at the end, we are going to actually have lowered ending stocks in soybean, which is almost 290 million bushels. And the season average price is forecasted at $10.50 per bushel, which is kind of slightly increased compared to last month or even last year, but probably given somewhat increased like input cost, we may need a little more like bullish move in soybean price for next couple of months. So that's just, I think, just crop by crop, a little bit of detailed discussion we had.
Yeah, that's good details, Seungki. You mentioned briefly in your remarks exports are going to be a key for the next few months. Can you explain a little bit, maybe beyond the U.S., outside of our country, some trade issues, some world production estimates, kind of some of those export-related aspects that are going to feed into this export importance?
Yeah, so probably like I prepared too many like slides and materials, so probably this will be posted, but let me just pick like my top pick of my like I will maybe show maybe just 2 pages for now. So this table was released this month, like this week Monday, so still pretty brand new, and we can tell like how our export performance has been doing for the past couple of weeks. So um, uh, like until like last week, corn exports like last week corn export was actually about like 80.9 million bushel, which is very high. 2 weeks ago, corn export was 54 million bushels. And remember, last year we had a record high corn export, but at that time last year, like November, like mid-November, we just had like 34 million bushels. So based on the export like corn export pace, we are just like more than double like faster like corn exports these days. So that's why I said we are really having a fast corn export like situation, which is I think really helping like digesting a huge corn supply these days. So if we just compare cumulative corn export up to date this marketing year versus last marketing year, the year-over-year change is almost, I think we are seeing already 263 million bushels larger than what we had last year. So which is 73% increased compared to last marketing year. So this is kind of basically why USDA argues that we're gonna even like have a bigger corn export at the end for this marketing year. This is a very encouraging situation. On the other hand, soybean, we're still like under influence of like China's boycott. So for instance, probably China is now like really like trying to like speed up buying like more soybeans from us like to fulfill the commitments that they said, like 12 million metric ton. But still, like as you can see in the table, like especially like highlighted in the red box here, last week, China, including China, like our soybean export was like 43 million bushels. And like 2 weeks ago, we made 41 million bushels. And when you just compare it to a year ago, we basically like exported almost double size of that. So when cumulatively, if we just compare like how much soybean we exported current marketing year and last marketing year, the same time period, we just like exported 274 million bushels less than like what we had last like compared to last marketing year, and this is 42.5% down. So that is why I think still like we are somewhat worried about our export progress these days. And the other thing I want to emphasize here is let me just like make some blank background and show you one thing. So give me a second. So probably I think this will be the right one. So or maybe give me a second. I try to make some dynamic slides here. So this is actually what I just for your information, this is the chart that we had just January this year, which means probably like we can check how much China purchased like by the end of this year, like, and if they actually commit and fulfill the commitment of 12 million metric ton, then like what that means compared to what they did last marketing year. So what I want to say here is China said they're gonna buy 12 million metric tons by the end of this year from US, which is almost 441 million bushels of soybeans. And people are very excited and maybe released, but my point is that will not be enough. If we just compare it to what China actually purchased last year, almost like by early January, China purchased, as you can see, the blue dot is corresponding to the right y-axis, and this is actually the amount that China purchased early January last marketing year, which is almost, I think, over 700 million bushels. So if actually we expect like China's demand support for the soybean market as much as what they did last marketing year, they should buy much more than what they committed. So I think eventually the 400 like the 12 million metric ton that China committed is a very realistic goal, and I think China will make it, but that's not gonna be like huge and like gigantic enough to like support and really like game change in the soybean market. They actually need to buy much more than they did. They committed if they are willing to meet their performance in the previous marketing year. So that's the point.
Oh, Eric, you're muted.
Seungki, appreciate hearing where things were in January for perspective. You off screen or off the air, you talked about some more information on demand estimates, perhaps some concerns in corn, opportunity in soybeans. Can you address those just a little bit more?
Yeah, let me quickly like talk them like very briefly.
Yeah.
So this is actually like what I said previously. So New World screwworm, and this of course this might be a big issue, I know, in the livestock industry and livestock sector, but also corn market will be affected by this. So the chart is actually what I generated based on the USDA data. And basically what I did is this is a monthly cattle import uh, from foreign countries to the US. And I excluded like intentionally like the immediate slaughtered cattle, so that basically this number is kind of capturing how much like new like young cattle are coming to the US from foreign country. And virtually just Canada and Mexico, these two countries are like the basically the two countries supplying the cattle and like where we import cattle. But the problem here is, as you can see, the green bar in the chart is indicating the cattle imports from Mexico, and as you can see, this is like much lower than like our like former years. And this is mainly because of the disease like outbroken in the Mexico. So it's not gonna be just the cattle supply issue, but also eventually this is going to cut our like corn feed demand. And as you can see, like this year from January to July, the imported cattle number not for immediate slaughter is only 34% of last year's. So and I don't think this situation has got better now, but yeah, so we will see. Hopefully this situation will be resolved soon, but I think if this situation continues, then we eventually will have to cut down the corn feed demand for the next maybe couple of months. So that's kind of something that I want to emphasize as a caveat down the road. And the other one is I mentioned briefly about the structural change in the soybean market, and this is actually like one like key like punchline I want to say, like that why I said our soybean market is kind of transforming from very export oriented model to the domestic use oriented model. And this in this chart, the orange bar is basically the crushing soybean use, and the navy bar is indicating the export soybean demand. And like I think just like during the past 10 years, there has been like very structural change happen. And as you can see, although export has been has gone ups and downs depending on like global competition, especially with Brazil. So for instance, like during 2021-22 marketing year or 2021 marketing year, we said this is a COVID blessing period, but also this was mainly because while like all the Latin American countries had a severe drought because of La Nina. So that really like helped our like export progress at that time. But there is a very stable and continuous increase in the domestic demand, like which is basically driven by the innovation and policy support, which is a renewable soybean diesel. So thanks to that, I think this will be probably will continue this trend. This trend will continue, and I think this is a little more like long-term structural change. So probably like I think this will be eventually change our like soybean market like model. Still, I'm not downplaying the importance of exports. It's gonna be still like major components of our market operation, but we also have somewhat more stable and predictable market like with strength in the domestic demand, mainly driven by this like expanded crushing these days.
Yeah, Seungki, given all these scenarios and situations that you've described, as we wrap up our time today, what are some of the strategies, farm management strategies, marketing strategies that you might offer up today for Ohio farmers? And then we're going to finish with a question that we had from the audience today.
Yeah, so I actually like just last night put together some of the Ohio data chart. So this is actually Ohio corn like cash and basis trend like month by month. The yellow bar is indicating like this year, this calendar year, Ohio like it's just state level cash price, and the which is corresponding to the left y-axis, and the line graphs are corresponding to the right y-axis, which is Ohio corn basis. I basically just listed this year corn price and basis trends and like 5-year average like from 2020 through 2024 historical average. So I think this kind of tells us some useful insights. So what that means, first of all, as you can see, recently actually Ohio like corn and maybe even like soybean, we see somewhat like improvement in the cash price. So you see the basis has increased from like minus 0.32 to minus 0.12 like just from October to November. So and that is partly because of the improved futures price, but also basically because of the improved basis. And Ohio, we had relatively like lower yield compared to other states. So it is not surprising that we are going to have somewhat strengthened basis these days. So given this like pattern, what I want to emphasize here is probably before like Brazilian or all the Latin American like crops like coming to the market, new crop coming to the market, that might be we might see some like good window of like sales opportunities. So maybe for from now to next maybe couple of weeks or maybe by the end of the year or maybe even sometimes early January, if you see some attractive prices, I would urge like farmers to like sell like during that like take advantage of that time window. Then probably there will be a little bit of maybe like uncertainty in the price, mainly because of the futures market. Um, but I think basis will likely continuously increase, like improve like for the next couple of months. So if farmers are willing to take advantage of hedging or hedge to arrive contract, there might be also be a good option. And finally, we know that like after May or like June, Brazilian like soybeans and corn, they also lose their momentum and the kind of attractiveness in the global market. Then usually we see some of the futures market, like future price improvement anyway. So kind of by like maybe for the last like 2 or 3 like month for this marketing year, in like June, like July and August, farmers might find some good sales opportunity too at that time. So I want to probably emphasize two different time windows, maybe now to the end of this calendar year, and then like next year, like probably like May through like August, there will be potentially like good sales opportunity to arise. I would say, like given this market structure. I also have a soybean chart here. We also have pretty similar pattern now, like now, so improved basis and cash prices going up because of future increase and basis increase. But this market, as I said, we are balancing on a knife edge, which means future market will be very tricky to handle. So I may be very reluctant to like taking advantage of futures rally. So whenever just future is going up, then just don't wait and like you don't expect rally will continue constantly, but probably there will be some like very volatile and like huge fluctuation further across the marketing year. So probably like taking advantage of basis will be much more like profitable for this marketing year, I would say, especially for Ohio farmers. And like lastly, like I wanna say I also put together this CRD level or the like cash and basis trend like so because it is very like local, like especially when it comes to like basis discussion. So just feel free to take advantage of, for instance, this is Northwest Ohio corn, soybeans. This is North Central Ohio corn and soybean. So please feel free to take advantage of these. Okay. So with
Yeah,
that,
so
let me just like finish the like I think I prepared too many slides, so I just let me stop and like take any questions if audience has.
yeah, so we're in the bonus minutes here after we've had your remarks. So we do have one question in the Q&A, but Seungki, and for everybody to know, we're going to post these slides, those last new slides that I don't think anybody has ever seen before because you're have developed those last night, and I've not seen those. I think those are very interesting to study. What you just said was kind of some basis improvements,
Mhm.
opportunities in the near future as we look for opportunities that the market offers up to us. So Seungki, we did have a question related to cost of production and not only just the United States, but also maybe some other countries. What country has the lowest cost of production per bushel for corn and soybeans? And what is the total cost of production per bushel for Brazil, Argentina for corn and soybean? Do you have access to data such as that that gives that level of detail for cost of production around the world?
No, I do not. But actually, like when it comes to this global competition, like a little more important thing is what is their port price. So when they are exporting, or even like as a global buyer, if we try to buy it, what is the price that we are seeing? That might be actually a little more important because that's where the contract is actually decided. So and actually I have the data about that. And currently, surprisingly, Argentina is actually having the lowest price in soybeans, and I think for corn as well. So mainly because like recently, I think just a few weeks ago, they just cut down their export tax, and that really improves their price competitiveness. And like it's still like US is the second, I think, like most competitive country in corn and soy market, but Argentina is nowadays really price competitive. Brazil, as they are still in the growing season, so their new crop is not like has not come yet. So they are like not cost of production, but their FOB price or like CIF price is somewhat higher than ours. So that's kind of relative price competitiveness we see in the global market. So I know it's not directly answering John's question, but you know that's hopefully answers like to some extent of like what he was curious about.
Yeah, so keep an eye on those port prices. Great, great. So as we wrap things up, Eric, thanks for dropping in the evaluation for this program. You'll notice all of you that are online in your chat box. If you could click on the chat and really take advantage of that link to the survey that you'll be able to give some remarks and feedback for today's program. Dr. Lee, thank you so much for your work in this area. Eric, thanks for helping to moderate today. We'll give this a final wrap up and a big thank you to everybody for joining us today. I really appreciate, and we really hope that you can join us again in the year 2026 for some additional coffee and grain marketing with Dr. Lee. We will certainly promote those out to our lists and our newsletters, and we wish you the best here on this Friday. and enjoy your holiday coming up next week. Thank you so much. Enjoy, everybody.